All right, event trader here, joined by blue chip trader Scott Smith, and we are taking a look at the week ahead. This is a segment that will prepare you for all the big events that are going to be coming out next week, allow you to kind of organize yourself Sunday afternoon, Sunday evening, whenever it is you do it, and get ready and get prepared for some of the names and some of the events that are going to be happening throughout the course of the week that could produce some volatility for us. So without further ado, we're going to break in and take a look at the macro, then some conferences, and then go through some of the key earnings that are going to be out. First things first, daylight savings over the weekend. Don't forget to put your clocks an hour ahead.
Boo.
Yeah, exactly, right, Scott? As just a small reminder, the U.S. is out in front of Europe on this, so it's going to offset some of the timing you're probably used to on some of the releases of European economic data. So I guess just kind of keep that in mind. But outside of everybody being grumpier for losing an hour from their weekend, the big thing going on Monday when we get to our desks is going to be the assessment of the Chinese economic data, which is due out Sunday at 10 p.m. We're going to get the latest in industrial production, retail sales, unemployment rates, as well as fixed asset investments. So that is going to be greeting traders when they get to their desk. Moving through Monday morning, relatively quiet. We do have some Eurogroup meetings going on, but the big event would have been last Thursday with Christine Lagarde and the ECB, so not looking for anything to impact the markets. In the U.S. here, it's going to be a big week for sentiment data, starting off with the Empire manufacturing numbers. So keeping an eye out on that. Certainly any pricing pressure that the manufacturers are seeing because of elevated prices will be closely watched. So that's going to be the big early event here in the U.S. Moving on through to Monday evening, we're going to get the minutes from Australia Reserve Bank, the Reserve Bank of Australia. So just kind of keeping a key eye out on central banks, which is going to be a big theme for this week, and we'll get into that here as we go along. Tuesday morning, we're going to get some more sentiment data with the German and Eurozone zoo surveys both released. And then moving into the U.S., pretty busy day on the economic front. We got the latest retail sales numbers, looking for a decline of about 0.5% month over month on the headline. Cores should be up slightly, up 0.2% is the expectations. And we got the capacity, utilization, and industrial production numbers out at 9:15. And then moving on to 10 a.m., business inventories and another sentiment survey with the NAHB housing market. Moving on to Wednesday, we get in Europe the final CPI numbers. These are revisions, so not looking for a big impact from there. Then we get Canada is going to have their CPI numbers. We'll be taking a look to see what's going on that front. Obviously, that could impact the U.S. here, particularly on the commodity price front. In the U.S., building permits and housing starts will be the key numbers early, and then we get the big Fed meeting. And the question is, will Powell kind of follow suit and change course to a certain degree and move along with Lagarde, who had she was pretty specific that it's not yield curve targeting, but it is yield curve targeting that the ECB is doing. So the question is, will the Fed do something similar and look to ease some of the pressure on the long-term rates? Certainly the 10-year yield and the longer-term yields will be a key item to watch early on to see if they kind of press Powell in that direction. It certainly felt like that's what they were trying to do today. So that's going to be a big item for the markets, obviously. Moving on later on that evening, Australia's got their latest jobs numbers coming out, and then we work our way into Thursday morning. And Thursday, another central bank's out. This one, the Bank of England. So you kind of get an idea of what's going on here. That's going to be the minutes from the Reserve Bank of Australia, the U.S. Fed, and the Bank of England are all out. Canada is going to have their jobs number that day, their ADP farm number, I should say. And then in the U.S., some more sentiment data with the Philly Fed, and unemployment claims are also going to be out as per usual on that morning. Moving on to the evening, we've got the Bank of Japan out. So again, if we we had the G20 meeting a week ago, and now we got all this big central banks coming out looking for some sort of concerted effort going on there. So they are the big macroeconomic events. Now let's take a quick look at some of the conferences that we have going on. Starting off Monday, JP Morgan's got an industrial conference. Mizuho is going to be running their energy summit. We got Bank of America with the Asia Pacific Telecom, Media and Technology Conference. Roth Capital will be weighing in with the investment and growth stock conference. This is their 33rd annual there. And then Advanced Micro Devices, AMD, is going to be releasing their third generation EPYC processor. So keep an eye out on AMD early. Tuesday, we got the Oppenheimer Annual Healthcare Conference. Morgan Stanley has a European Financial Services Conference. Bank of America running their Global Securities Industrial Conference that day too. Another energy conference, this one coming from UBS. And then Citi's got their own TMT show kicking off on Tuesday. Wednesday, Maxim Group's going to be running their inaugural Emerging Growth Conference, and Bank of America has an Information Services Conference starting that day. Finally, on Thursday, we got the JP Morgan Auto Show starting out on Thursday. One other item of note to report for Thursday, that's when the U.S. and China start their first meeting under the Biden administration. That's a 2-day meeting set for Alaska, so that's certainly going to be garnering plenty of attention here in the U.S. and China and across the globe. So that's what we're looking at on the macro front. Some pretty big items. The Fed, that U.S.-China meeting obviously is going to be pretty important for the market. So we will be providing plenty of updates on these as we go along. So, Scott, without any further ado, why don't we take a look at some of the earners that are going to be coming out. And it's really a pretty quiet week. But before we jump into the earners, as I mentioned, AMD with their new EPYC processors. What's your thoughts on AMD? I know you've traded it a lot in the past. It's obviously been one of the spaces, and the SMH in total, too, that's been hit pretty hard as of late. But AMD, like so many of these names, really coming into some key support and now popping up to test some resistance. So where do you stand on AMD?
Yeah, that 74.75 support over the last couple of months is pretty obvious on the chart right there. Recently dipped below the 200-day moving average, which is that green line. So it's just the start of a red flag. It really needs to hold this 75, 74 support level. I do have some concerns that it is in that tech group. In fact, it's been lagging. If you really want to go off of relative strength, relative weakness, AMD peaked out early in January's time frame. If you just compare it to the SMH, was really strong during January, pulled back slightly, really strong during February, and then started to roll over. And so on a comparative basis, if I do AMD versus the SMH, it actually looks awful. And AMD has been actually underperforming not only just this year, but it's been underperforming. I already have a line drawn there because we probably talked about this before. It's been underperforming since September of last year versus other semiconductors. And yet, I got to be honest with you, Gav, I hear a lot of people say they like it and they want to buy it and they keep wanting to own it. You're buying a laggard, and that's a problem. So they better have some fantastic, something coming up here in this conference that they're going to run, or some fantastic earnings growth, top and bottom line, to really kind of become a leader again. Because right now it's definitely a laggard in the group. I don't like it at all.
All right.
You're not long it, are you?
I've got my entire life savings in it, Scott. No, I am not long it myself.
All right. Anyway, but that's my opinion on that one, Gav. Also, just remind people too that if you are following along, underneath the calendars drop-down menu there, this is where we're getting all the info from. Gavin just went through all the economic calendar there. He went through the events and conferences, the top events as well. And then we're going to be running through some of these earnings calendar, the earnings results calendar as well. You can just click on them and then make sure on the subheadings you go to the upcoming week. And there was one big event too, Gav, that you forgot to talk about next week.
What was that?
St. Patrick's Day. or
Ah,
17th. It's Wednesday.
St. Patrick's Day. Well, I mean, if we're going that route, we could also throw in the Ncaa tournament on Thursday and Friday, and
Oh, does it
that
start that soon? March Madness?
yeah, well, yeah. I mean, it's always right around St. Patty's Day, right? And the item that I don't follow it nearly as much as I used to, but we do know that there's usually a fall off in volume right around that time frame because a lot of people would take a break and go watch the TVs down on the exchange and stuff. I would assume, since most people are home now, that they will continue to watch the TVs
Hmm.
and keep an eye out on things. So it could definitely lead to a slowdown in volume for that Thursday and Friday. So I guess keep that in mind.
Yeah, good point, good point. And I think Diageo is the owner of Guinness, if I recall, right?
I
DEO.
believe so. Yeah.
Yeah, yeah. So that chart's been looking pretty good here, but it seems like I want to say it does good running up into March of every year, except for last year. But
Yeah.
anyway, just always a fun one to kind of track. All right,
Yeah.
Kev, I don't want to waste too much time here,
All right.
so what do you want to do?
Yeah. Monday, we are looking at the Monday earnings. Really slow day, Scott. The only one that I had interest in was Desktop Metal, ticker symbol DM. This finds itself in that PRNT printing ETF
Oh
run
yeah.
by ARK Investment.
Hmm.
It's another one of the 3D plays here, and it's obviously falls into that price action where it had an aggressive rollover coming into support right around. It touched its 200-day moving average, which was down at $14.47. It's since bounced back about 35% or so to the 2042 area, trying to hold above 20 right now. I'm not sure what to expect from their results, but certainly you want to keep an eye out on this space with 3D, that's DDD, SSYS. All of them have been pretty volatile names, so Desktop Metal could certainly have an impact on some of those plays.
Yeah, for sure. I'd definitely be a little careful right here around this area. It's kind of in no man's land given where it's been. I would even flip out to the weekly time frame to see how things are shaping up here. This is a pretty aggressive move on a weekly time frame, given up all those gains that it had early on in the year. Nonetheless, it's an inside week right now. So it's going to be very interesting. I would really need to see it get above these 2 week highs here at 2150, 2088 to maybe potentially consider it for some upside there. Just out of curiosity, I want to see what the short interest is on this thing. I don't know if you've looked at it, Gav.
Did not take a look at that.
It's running, so it's pretty low. It's about 6-7% on 92 million shares of a float. So, yeah, it's all right.
All right. Next up, we are moving in to Tuesday. Now, a lot of these plays that we're getting here are going to be January end dates. So definitely something to keep in mind. Gives you a little bit more coverage. And we're really not all that far from kicking off the Q1 earnings season. And Scott, we're about a month away before the banks come out. So, but Jabil. It's a electronic manufacturing service and device and diversified manufacturing service play here. So basically creating a lot of the electronic circuits for the semiconductors and telecom areas. So always a big name to kind of get an idea of what direction that group's going. But as you can see from JBL, that breakout above 45, it's been pretty strong, but always get a little nervous about buying stocks that break out into their earnings, Scott.
Hmm.
So be keeping that in mind and keeping a close eye on these JBL results. But this could help set the tone for the telecom and semiconductor industries early on as we see one of the equipment providers and their earnings.
Yeah, it's not all-time highs, but it's definitely it looks like almost 2 decades highs on this recent breakout here. And yeah, you have a nice little range going on there between 42, 46 recently. Obviously, you don't want it coming back into that range. The further it drops into the range, the more of a false breakout pattern you're going to receive there. So as long as it stays at pretty much, I'd say, above $45. I think it looks pretty solid for continuation to the upside move there. That's JBL. Yeah, good stuff.
All right. Hold on a second, Scott.
This fits into while you do something else. This fits to my theory that I was talking about earlier today, Gavin, this afternoon, saying how your best bets are always to focus on the
Strength.
charts that are in the top right-hand corner of those charts, up and to the right. Even when the market, everyone else is panicking about everything else breaking down below the 50s and Nasdaq, you're always going to be able to find a chart somewhere that's going up and to the right, and this one fits the bill.
All right. Next up, we got Coupa Software, a nice cloud computing play here. This is obviously looking a little weak as it comes rolling in, still trading at a price of sales of 44.5 times, 67 million floating at 10.85% short interest on this. This cloud computing space has definitely been kind of the zone where we've seen hit harder than anything, I would say, Scott, when it comes to the sell-off on the rise in yields, and Coupa definitely falls into that. Ugly-looking chart sitting below its 200-day moving average, really hasn't been able to bounce above that 270 area. Now, what they do is they basically work with supply chain companies to help them reduce costs through billing, procurement, things of that nature. So definitely a hot space, but a very expensive name, and this stock's just really getting hit pretty hard. You there, Scott?
Yeah, I'm sorry, Gav. What happened? What was the charts?
Yeah.
Sorry, just had to run out quick. No, Coupa Software. Yeah, I agree. It's a little precarious right now. Soon back below the 200-day moving average, underneath that 300 support level. Yeah, 300. That looks like the line in the sand I would basically look at for the resistance that it would need to get up and over. To the downside, 240 looks like the next key support level based upon the September and November lows. So just draw those lines in right there. Boom, done. The sales of the company look pretty good. They seem like they have been, fitting all the criteria to be amongst leading growth companies. But bottom line growth, it seems like it fell off a cliff last quarter. So that's a little bit of a concern there.
All right. Next up, we've got Crowdsource. Ticker symbol CRWD. I've been talking a lot about this. I'm along Zscaler, of course, but Crowdsource, another strong cloud computing cybersecurity play. But again, a weak-looking chart. This one is trying to fight its way back over the 200 level to push back towards that 50-day moving average 217.
Mm-hmm.
So I'm really curious to see how this plays out because of my long in Zscaler. You got any thoughts on Crowdsource?
Yes, I was just drawing some trend lines. I don't like the ones I drew, but I do see this. So there is that elusive broadening triangle pattern that seems to be much more in play here. You can see it kind of taking hold right around there. And basically what this says is that the stock was strong, but now things are getting real hairy in it, and it's starting to see every higher high be sold into. But at the same time, every lower low is also being bought up. So it's really in this wild and loose range going on right now. And hopefully earnings will, take it out of this whipsawish behavior and put it into a more stable, easier to trade sort of pattern. So overall, looks like a phenomenal growth company, top and bottom line acceleration. It's in a hot space, being more of the hot cybersecurity area. I think it looks okay. It looks okay, but I would just definitely pay attention as that 217 50-day moving average level right now looks like the deciding line in the sand based upon the pattern that from the last 3 months.
All right, then we move on to Lennar, ticker symbol LEN. Housing had been under some weakness because of the rise in rates. We did see that bounce back, but a little bit of a rollover. So really curious to see what they have to say, if that's having any early impact at the moment. So LEN, what are you seeing in the charts here, Scott?
It looked good, back in February. It came flying back in. It started to look good in early February, in early March. It's starting to come back in a little bit. Let's just take a look at the group, the ETF ITB. XHB. They're actually doing really well. And you know me, Gav, when it comes to trading these groups where so many of these names are so similar in business models, from Lennar, KBH, Hovnanian, Pulte, DHI, Beazer, MDC, they all just fall into the same group that I'm always going to lean towards trading the ETFs themselves. So you get the full diversification, and they tend to be pretty good movers. But right now, I would say that the XHB and the ITB look pretty solid out of these recent rallies back up near year-to-date highs. So I'll give Lennar the benefit of the doubt above $80 right now, which is a support level from last week.
All right. Next up, we got another cloud play, Smartsheet, ticker symbol SMAR, cloud-based platform, helping people execute on the work processes there. So it looks just like all the other cloud charts that we're looking at, Scott. And, we've been talking a lot about this the last few days, bouncing off support to run into new resistance, and that's the big story here. So we'll see if they're able to produce the type of numbers to get them through that resistance.
Yeah, and like you said, so when you get a chart like this, it seems pretty obvious to me that the $60 mark is a key line in the sand. It was prior resistance levels, now becoming new support here on this recent corrective move. But you are back below the 50-day moving averages, which is definitely a concern. If you go out to a weekly time frame, you can see the long-term uptrend is still in play. $60 is still in support. We bounced off it really nicely. We go out to a monthly time frame. Things look a little bit more dicey. I don't particularly care for the fact that things above $70 the last couple of months seems more like distribution. So if I had to put a deciding factor in this one based upon earnings, I would basically say it's got to get back above this $70 area and maintain the strength there. So to the downside, support at 60, that would be my line in the sand where I'd be interested in it. And then as for getting back above resistance, it's got to get back above 70.
All right. Next up, we are moving on to Wednesday at this point. We've got King Cloud, ticker symbol KC. Scott, this is actually the highest weighted name in the Sky ETF, which is the ETF for cloud computing plays, which would make sense. This company offers various cloud services and verticals in the Chinese market too. AI, e-commerce, education, mobile internet. So hitting all the right buzzwords for sure. It's a ADR, 86 million float. Trades at a price to sales of only 13.6 times, which is dirt cheap for a cloud play. You got any thoughts on KC?
Yeah, so for what I'm showing on the data here, let's see, got accelerating sales growth top line. Bottom line is still negative, it looks like. So you really need them to kind of get the bottom line growth going overall. But this is common of growth stocks where that kind of happens, where they move on their revenue increase, and then you hope management can basically do something to raise the bottom line in the future. So that's the future prospects, and usually it's evident on the chart there. So, but nonetheless, what I see here is $50 seems to be the key line in the sand for sure. It does slip back below the 50-day moving average, which is creating some resistance around 55. I would say, just as long as it stays above that March low of $46, it looks pretty good. If it fails below that area, you could be looking at a retest of the key support at $40 with the 200-day moving average just coming into calculation around 39. Yeah, I definitely like this one. You surprised me last week when you mentioned this one, and because I have not been following it, but I do like the overall. Use my IPO theory of tracking the debut price or the debut range, and this one made its debut last May. Just under a year ago, and after a little bit of a stutter step the first few weeks, managed to accelerate to the upside and just continue higher. So I think it's definitely a name that should be on everyone's radar going forward. Yeah.
All right. Next up, we got Pinduoduo, ticker symbol PDD, Chinese e-commerce platform. It hasn't been a good week for them. Just take a look at what JD's done, and Baba, of course, as well. Pinduoduo looking a little precarious down at this 160 area.
Yeah, these groups obviously fallen out of favor for sure. Back underneath the 50-day moving average, back underneath the 20-day moving average. You have key support for Pinduoduo at this prior, it looks like a prior earnings gap from November, right around that 130 area. Recently, just last week, fell down to about 136. So that's 136 to 130 would be a key area. If it cannot hold in there, you're going to be breaking down to the 200. To the upside, again, you got a lot of resistance from prior weeks that's going to come in play here. I would say you really needed to get back above that 180 mark to get moving to the upside.
All right, next up, Scott and I have been making a lot of cracks about this with the rise in inflation. About Five Below being the new dollar store, Scott, since a dollar's not going to buy anything anymore. FIVE, pretty strong chart overall. Has been a little bit more of a sideways consolidating period, which is fine considering how much it ran up from May through the early part of the year. Sitting right on its 50-day moving average at the moment.
Yeah, this chart looks fantastic. I mean, it really is a phenomenal uptrend on a 45-degree angle above a rising 50-day moving average for almost 9-10 months now. Just responds well. The recent support in this range that's been developing the last 2 months, you have key support, looks like right around 170. So that would be a deciding line in the sand factor going forward. If things got a little bit weak after earnings, 170 is definitely a key support. Otherwise, to the upside, you're looking at over 200. It's going to be blue sky territory. So, it should be nice and strong moves to the upside if it gets over there.
All right. Just keeping an eye out on this Fubo story as it unfolds down a little bit in after hours trading. The president had stepped down. This apparently had happened on March 8th, but I guess it's just making its rounds across now. So we'll keep an eye out on that.
Okay.
A-Rod and J-Lo broke up too. I'm seeing headlines for Scott. Keep you, and I know you're following it closely. Then finally on Wednesday night, we got Williams-Sonoma WSM, certainly high end. Retail's been doing pretty well for themselves. It's another good looking chart, Scott, just kind of flipping between 125 to 135. And this is one that I could see running up and trying to break out ahead of earnings. Not that I love seeing actions like that, but good looking name here.
Yeah, Gav, it's funny. A lot of these retailers have been performing really well. It's not just Williams-Sonoma. I noticed Gap stores, GPS, has been doing phenomenal too. I think it's actually having probably one of its best performances that I can recall in years. Gap has always been somewhat of a laggard retailer, and it really is just having a phenomenal last couple of months. I could throw in so many more from I think American Eagle Outfitters is another one. AEO just having a phenomenal year. Urban Outfitters also been climbing higher there. Now I know Williams-Sonoma doesn't sell apparel. At least last time I checked, it doesn't. They're more of a like home furnishing sort of stuff, right? Like
Williams-Sonoma.
Yeah, more.
Yeah, it's like kitchenware and stuff.
Yeah. So yeah, obviously it's these niche retailers, I guess if you want to call them, home furnishing are doing really well. So, not really not really a trading vehicle that I've been going after, but I can't deny the strength that's been in this chart the last couple of months there. So pretty solid action. Love how it's bouncing off the 50-day moving average, putting a nice solid short-term support around the 120 area recently. So that would be the short-term line in the sand I would track. And then to the upside, you do have a little bit of resistance coming down off the January, March highs there. So it would have to get back above 140 to get something moving to the upside.
All right, moving on to Thursday morning here. One other name it is not confirmed, but Jeffries, JEF, could be out. Always a good one to keep an eye out on because this gives us some insight into the investment banking world and how they're performing. But again, that is not confirmed, so I did want to throw it on your radar. Moving on to tomorrow morning, CSIQ, Canadian Solar, the Chinese solar play here. You know, another one of those charts, Scott, where we've seen it bounce off key resistance, now running into, or bounce off key support, now running into key resistance here. We'll get an idea. The numbers so far, the solar numbers that we've seen from some of the peers have not really been all that impressive. So going to be curious to see how they react here.
Yeah, I mean this is classic corrective activity, and we've seen this, across the board in a lot of these Nasdaq leading names recently. They take some time to recoup from. These are somewhat broken charts in the short term, intermediate term basis, and it might take a few more weeks or a couple earnings reports to really kind of stabilize things, and then make them to see which ones really come out as leaders from these groups here, which is why again I go back to saying you're really just better off focusing on the upper right-hand quadrant of the charts there and up and to the right. Something like this is looking a little bit more down and to the right, so you have to be a little bit more cautious on it. Take a look at the TAN ETF, TAN. A lot of stocks, a lot of solar names do tend to trade very similar in patterns on a day-to-day basis, week by week basis, and the TAN itself, phenomenal gains and trends a year ago, really starting to break things down a little bit here the last few weeks. Does raise a red flag overall. So for CSIQ, deciding line in the sand, I would say, is the 200-day moving average around $36, $37. To the upside, let's go with the Psych 50 level. I think the Psych 50 level is going to cause some headwinds for this one.
All right. Then we got commercial metals, CMC, pretty strong space. We've heard a lot of talk about the rise in prices in steel, so we'll get some information on that. CMC, Scott, any thoughts?
Phenomenal. Up and to the right. This is what I've been talking about. This is the ones you want to be trading, the ones you want to be involved in. Fantastic move to the upside. We've talked about the SLX a couple times here the last few months, the steel, the ETF. This is a component of that, just helping it move to the higher, up and to the right. The infrastructure ETF, IFRA, Indigo Frank Robert Alpha. Also another strong up and to the right group there, so you're seeing all the benefits going on there. I think there's another one too, a PIC. I think PIC is more mining. But PIC is doing pretty well. XME's also been doing really well. So basically, you have all these. My point is, metals and mining are just doing phenomenal. Freeport-McMoRan has been a leader in this space as well as various other steel stocks. Here's U.S. Steel. I got long this one earlier in the week at $20 in that breakout, and we had a phenomenal move here in that play here this week. Nucor up and to the right. Steel Dynamics up and to the right. Schnitzner Steel up and to the right, RS up and to the right. I'm starting to think maybe these are too parabolic now that they've gone up too much. But cool thing is, take a look at the long-term monthly chart of CMC commercial metals, and you can see that this is just starting to break out to a decade high above $26. So is it relatively cheap, Gav? Does it look like a good longer term play as opposed to a short term? Because short term it does look a little overbought here, right up to that 30 psychological level. But any sort of pullback that looks healthy, let's say above $25, $25, $26 would probably be something maybe worth looking at.
All right. Next up, we got Dollar General, ticker symbol DG. This one used to be the outperformer of the group, but Dollar Tree's actually looking a little bit better of the two. Now, this one had been sliding lower down at 175. We've seen it bounce back about 15 points, but if we're going to see an impact like we were joking about with Five Below before on these dollar stores, we could get a little bit of an update from that on DG. Dollar Tree did not seem to be under that much duress on their margins with regards to it. So not expecting an overly negative quarter from DG, but definitely the uglier looking at the chart of the two.
Yeah, so when I just pulled it up, I automatically went to a monthly chart, and I had some of these lines drawn in there. Basically, it's this falling wedge or corrective move off of recent highs that was really strong throughout 2020 in context of a very strong multi-year uptrend. So really good price action so far, finding a recent low around 175, 180 area. There is this potential in this monthly time frame that it could be bouncing and moving back to the upside there. You look at this on a daily time frame, It does raise some questions. The correction was pretty aggressive there. You do have it below all the key moving averages, the 20-day, the 50-day, the 200-day moving averages. But did it go too far, too fast? Did it actually correct enough? That was a 21, 22% correction enough to kind of reset the chart in context of the bigger picture uptrend? That's going to be the deciding factor here with earnings. Top and bottom line don't look horrible. I mean, they've been maintaining some pretty good, growth momentum there. So I think it's kind of in no man's land right now. To the upside, you got the Psych 200 level, right where the 50 and the 200-day moving averages cross. To the downside, I would basically use that 175 to 180 zone as support.
All right, next up we got Signet Jewelers, SIG. Recall about 2 months ago, nearly at this point, they came out and reported pretty strong holiday numbers. Obviously, that's huge for this company. I think the holiday season sales were 1.8 billion, flat year over year. Preliminary same-store sales had improved 5.6%. E-commerce sales up 60%. No surprise there. So people are going to be expecting a good report. That's been evident in the move that we've seen. I'm always a little nervous when you see moves like this and you have a fair idea of what the expectations are, that you're going to get more of an inline number that could beget selling back down to that 52 area is what I would expect to see next week from Signet.
Yeah, here's a monthly chart of this one. So I would say that this definitely seems to be a very cyclical business per decade. I mean, it just goes. It really just has these massive climbs and then these massive corrections. It is recently coming off, with the COVID lows last year, a year ago, off of multi 20-year lows. It looks like that it's been rallying back above there. It is getting back above a long-term. What are we looking at there? About a 5-year downtrend line that this stock has been busting out over. It did get back above resistance right at that $30 area, and now it's starting to head towards some resistance. This is coming in around 70. So, what do we have on our short interest on this one, Gav? Do you know by any chance? Can you take a look at that? But right now, it definitely looks like you said. It's definitely looking like it's gone a little bit more parabolic in context of this 45-degree angle uptrend. It's starting to go a little bit sharper incline there that makes us all nervous around 60.
Yeah,
So
50 million floating. It's a 13% short interest, Scott.
that's
It can
yeah.
get volatile.
Yeah, they can have very volatile, so it's going to be an interesting name for sure. Use 50. I'd use 50 as the short-term support area, psychological 50 area. 60 is the obvious, psychological area at this new high territory, but I think 70 is really going to be where the ultimate resistance comes into play in the long-term charts.
All right, and then we got the two big names for the week, Fedex and Nike. We're going to break into them right now. Fedex, I'm expecting a pretty strong number. I've seen some concerns around the weather impact and some of the shutdowns and how they might have impacted some B2B, but hasn't really. I haven't seen too much of that. I'm expecting strong operating margins from Fedex. We've been talking a lot about the pricing power. I remain long the IYT and JBHT and KNX. They're all performing great. Everything I've seen from the cash transportation has pointed to strong pricing power. I know, Scott, when I drove back to New Jersey, I saw FedEx trucks all over the place.
Mm-hmm.
As a heads up to their CEO, Fred Smith, he's going to be testifying at a panel, at a U.S. House panel with regards to green infrastructure growth. So, keep an eye out on that ahead of the earnings report. He's not going to say anything about earnings in that, of course, but just if you're kind of curious to for some of like a workhorse or something like that could potentially move on any FedEx news,
Mm-hmm.
I'd put that on your radar. And again, FDX chart looks great, moving above the 50, breaking out above 258. I believe you got long it today, Scott. Am I incorrect on that?
Yeah, no, I was talking about it all week,
Yeah.
and a little bit last week. I tried for a breakout over 260 last week, and I actually got stopped out of it, and then I jumped back in it this week as it started to clear. You could see this clear resistance level back above the 50, back above the 20-day moving average, which is crossing the 50 to the upside. I just thought it had the momentum there. It's got all the makings of a pre-earnings trade, and that's really what I'm going for here. I'm looking for just to capture a few points. I'll take, if we get up to 275 at any point before next Thursday, that's going to be a no-brainer for me to just kind of, take that as a short-term swing trade. But what I really like about this chart, and one of the reasons, in addition to the fact that it's been basically in its own little world here, going sideways, against the rest of the market's craziness. I did definitely like the monthly chart here, and the monthly chart. If you just kind of take a step back, you had this huge, strong performance in the second half of 2020. You did have a 2-month corrective move, and now you're starting to get back above these recent pullback highs, and that's really what's enticing me, thinking that okay, we could be embarking on a new leg higher after this 2 to 3 month corrective activity there. So I do like it to the upside. Like I said, overall, I'm probably not going to hold it into earnings unless I have a substantial cushion to do so. But right now, it's just kind of a short term, looking for that pre-earnings run up ahead of Thursday right now. But I think it looks pretty good overall above 260. If I had a bigger picture outlook on it, 260 with my line in the sand.
Okay, and then we've got Nike, NKE. This one battling with its 50-day, obviously keeping an eye out on the strength of the consumer. They've also, a global brand for sure. So watching to see how they're doing in all regions. The Asia Pacific region has been a key driver for them, but there's been a little bit of concern about a slowdown after that had been one of the big leaders in late 2020 there. So we'll be keeping an eye out for that. Certainly another one that we want to watch in terms of rising prices for materials going into their products, to see any commentary around the impact on margins and also pricing power, the ability to pass through those costs and with pricing power. So this is one that I'm still long in. I might look to bank following earnings. We'll have to see, but I would expect, given the amount of strong reports they've had over the last couple of quarters, for this one to see some buying and a test around that 145 area, maybe even for a breakout ahead of the results.
Yeah, it's kind of in no man's land right now, given the fact that if you look at the range over the last 3 or 4 months, it between 130 support and 145 resistance, it is right there in the middle at 140, along with the 50-day moving average just starting to roll over a little bit. So really don't know which way it's going to go, but obviously, the support levels at 130 and the resistance at 145 is pretty obvious. If things get hairy below 130, you probably have some support around the 200-day moving average and this gap and the October low that comes into play around 120, 122, and that would be the deciding, key support level that it would have to hold. Above 145, though, I think that might be. Is it all-time highs? Yeah, you're looking at all-time highs at this one. So this is a monthly chart I just switched over to. So pretty strong action. Blue skies above 145.
All right, and while we're talking here, Scott, looks like you have still slipped out some guidance.
Really?
It's holding up well. Let's take a look. Adjusted EBITDA about 540 million. That's higher than the expected 522 million that was expected. So positive there. Looking at 61 cents a share. I see an estimate of 73 cents, so it's a 12-cent miss. Taking a look, strong market conditions and a well-timed acquisition of Big River Steel are allowing us to drive significant earnings growth. So then why'd you miss, right? Healthy, flat-rolled customer demand across most end markets and the flow-through of higher-priced steels are resulting in substantially higher results from our flat-rolled and U.S. Steel Europe segments and our newly formed mini mill segments. So looking like some good numbers out there for U.S. Steel. Stock reacting a little bit mixed. Odd time for us to get this news. So I'll be curious to see how they respond on on Monday morning.
Yeah.
So
yeah. Oh, I got what I wanted out of the trade this week. It took some patience initially, buying that breakout over 20 earlier in the week. And then, just like I mentioned earlier, and I showed on the charts there, it's just a strong group. So when you got this strong move in a stock that, is potentially lagging its peers, it's just a matter of just being patient and waiting to see what happens. We were either going to find out, we were either going to see the rest of the steel stocks come diving back in the next few days and be stopped out very quickly and find out that we were wrong in this trade, or it was going to basically get pulled up by the continued strength in the group, and the latter worked out in our favor here. So like I said, I got what I wanted out of this stock, getting a move all the way back up to these highs around 24 for a really nice trade. We'll see how it responds to the data come Monday morning. It's good stuff.
Okay.
One more thing, it looks like somebody in feedback gave us a heads up that
the quadruple witching.
Yep, we forgot that it was another event this next week. Is that we do have the quarterly expiration on Friday, so added volatility most likely, especially for stocks that are sitting in the bottom right-hand quadrant of their charts, around those 200-day moving averages, and definitely for the ones that are sitting up in the upper right-hand quadrant of those charts. So good stuff. Okay. Should be plenty of good trading opportunities next week. Is that it, Gav? Are we done?
Nope. Sorry, nope. Just helping out the in-play team at the same time, making sure they are aware of the X guidance here. So give me a quick second.
Sure.
Okay, so next up, we've got ERJ, where we want to keep an eye out on them. They have a JV with Boeing, so Boeing's been a pretty hot name. So ERJ, Scott, another one that's seen a nice price action here. You got any thoughts on that chart?
Yeah, Brazilian aircraft manufacturer. Huh? I'm not too familiar with this one.
Yeah.
But look at the volume going on in this name the last 6 weeks or so. I mean, this stock was trading maybe 1 to 2 million shares on average. And in the last few weeks here, since breaking out over $8, it's been trading easily over 5 million shares on average, sometimes even double that, up to 10 million. So there is definitely some hefty volume going on in there. Look at the unbalanced volume too, just so you can see the acceleration, confirming that same thing there. Obviously that coincides with the strength that we've seen, the renewal strength coming back in with the COVID vaccines being distributed, and this is basically the airlines are like a reopening play, the assumption that people are going to be traveling even more again. But you have a nice breakout over long-term resistance around that $10 area on hefty volume. Looks pretty solid. I would imagine that earnings are not going to be there. Maybe they're coming back slowly. So it's like I said, it's kind of a reopening play.
Yeah.
I wouldn't be, too aggressive ahead of time, but yeah, I definitely would give it the benefit of the doubt that it looks like it's on a rounding bottom recovery effort. Here's the JETS ETF, JETS. You can see that clearly, the aircraft sector has been doing pretty well. We point out the relative strength this morning for a couple of these breakouts. I know which one was it today? Was it Save? Save was breaking out. I think there was one of them that really caught my attention. That was in Mesa. Oh, maybe American Airlines. Maybe that was it.
There was one that you pointed out a couple of days ago. I know that.
Yeah, that was Mesa, MESA. Yeah. Yeah, but they've all been phenomenal. All really strong, great movement there. Be a little cautious. Maybe they're a little overbought here. But yeah, you can't deny the relative strength there in that group. So
Yeah. One other thing too that I thought there's a Senate Finance Committee meeting on the tax code is going to be out on Tuesday as well. So curious to see if we get any if we get any commentary on what direction we're going to go in terms of transaction tax, capital gains, dividends, any of that stuff. So that could all
Speaking of
have
real
pretty
quick,
big
Gav,
impact on the markets
real quick, the transaction tax. What have you heard about that?
in terms of how far they're getting.
Well, and that, and how is it really gonna? I mean, is it gonna really
I
put
think
a
it's going to happen
significant?
personally.
I mean, how much of an impact is it going to have on liquidity in the market and is it only going to be on high frequency trading, or is it going to just absolutely kill the retail trader who's trying to, trade from time to time? Or
I mean, it'll work its way through no matter which way you look at it, right? I mean, it's either
right,
going to be the people that are executing the trades that are going to roll back their free trading, or it's going to be directly impacting them. So either way,
yeah, yeah. I mean, this will be one of the first times in history that they do that, right?
yeah, but I mean, we've certainly, and taxes is something that they could definitely push through. So I would expect to see that.
And it would be federal. It wouldn't be state by state, huh?
Yeah, it would be federal, from my understanding. It's something that we'll be talking with Carmine at in our Monday.
Okay, yeah. Obviously, I'm against it.
Yeah, I get why they're going for it, to be honest.
You do? Why?
Yeah, I mean, a K-shaped recovery in the economy, you could argue. What is the merits of trading, as much as we like to do it? I think it's low-hanging fruit for them to be able to grab.
K-shape being the rich get richer, the poor get poorer.
Yeah,
Yeah.
It's definitely been outsized gains in whatchamacallit, in the markets.
I mean, I've always found the stock market to be the ultimate.
I'm not arguing that aspect of it, but
yeah, I found it to be the ultimate equal playing field. You don't have to be a genius to make money, and it allows people to go from rags to riches, and it also makes other people to go from riches to rags.
Yeah.
I think it's the ultimate equal playing field. It's an auction at best, and I don't agree with any of that, but again,
but I mean, just look at who's pulling the.
it
it's
depends.
happening.
Yeah,
I don't know what else.
The wheels are in motion. Yeah, I hear what you're saying.
I'm not completely against it as a temporary thing, because we are about to borrow $2.8 trillion worth of treasury bills to pay for all. I mean, we got to pay for things somehow.
Yeah, I hear you. I mean, they could just print more money. They seem to be accustomed to that.
No, that's what everybody seems to think that we could do. I mean,
Yeah.
You need somebody buying it at one point. I mean, yeah, the Fed could monetize it away, I suppose, if you want to go with that argument. But
transfer it into Bitcoin.
Yeah, right. At this point.
Yeah, we'll see. I think I'm mostly concerned about liquidity.
I agree. I mean, the liquidity would so it'd probably lead to a little bit more volatility overall.
They might have to go back, get away from pennies, and go back to trading in eighths. I mean, it's just, I don't know, it just seems kind of nuts. Anyway, all right, is that it?
That is it. So I think we're good to go.
Okay.
Everybody out there, have a great weekend. And that's going to do it for us. All right, Scott, you take care. We'll talk to you soon.
All right, good. Have a good one.